There's a specific formula, a blueprint that you can use to rob prop firms for everything that they have. And in this video, I'm going to share that exact blueprint with you. So let's get straight into it. Now, this blueprint isn't difficult to implement. You just have to follow exactly what I share with you in this video. Now, I want you to think of each stage of the blueprint in terms of building blocks. And we're going to start here at the bottom with the first part, the first foundation, the first specific block. Now, in the first part of robbing prop firms, what's most important is that you have an edge, a trading strategy that you are certain in. Now, you need to have a specific trading style or a specific trading strategy that you have certainty will bring you an edge if you consistently execute on it. And you can get this edge by studying other educators and learning from other educators, or you can come across this edge over a larger sample space, over a longer period of time through your own testing and through your own development. Where you get your edge from doesn't really matter as long as you know you have certainty in your edge that if you consistently execute on it, it's going to yield you a profitable return. Positive more so than negative over a larger sample space. Doesn't mean you'll be right every single time, but more times than not, you'll be right. Okay, the second component of this blueprint is that you have to now take this profitable edge and put it into a mechanical trading plan. Now, this mechanical trading plan needs to cover your entry points, your exit points, and your risk management. So every component of your edge that you have tested and developed through back-tested data or through studying from different educators needs to now be summarized and synthesized and put into a mechanical system that you can come to the market with every single time and execute on to build consistent profitability. You can't expect consistent profitability without an edge. You certainly can't expect consistent profitability if you're coming to the market every single time and executing differently. This is why it's important to have a mechanical trading plan that can guide you in the markets. Now, if you don't already have a specific trading plan, I've got my template, which is the 6-figure trading plan template in the description below. It's completely free. Just download that and use that. Now, the next component, once you have your edge and you've put your edge into a mechanical trading plan, is you now need to learn how to manage your expectations before every single trade. Before every trade. Now, I talk about this in pretty much all my YouTube videos, but your expectations, your positive expectations that you create in your mind about what you think the outcome of a trade is going to be is going to take you away from seeing the market objectively, the market in front of you. You're going to have confirmation bias to only let in information that supports your expectation, and you're going to have disconfirmation bias to block out any information that runs counter to it. So whenever we create expectations in our mind about what we think the outcome of a trade is going to be, you block yourself out from being present with the real market in that point of time. And how can you execute on your edge, on your mechanical trading plan? By seeing the market objectively, if you're creating all these expectations in the virtual market about what you think the outcome of a trade is going to be, about what you think you're going to get from the market. Especially when you start to scale up with funding and now you have all these bigger figures and all these bigger ideas of what you can do with the money you're going to make, all your positive expectations of the outcome of a trade that you create before you get into a position are going to take you away from your trading plan, are going to take you away from your edge. This is why this is the next step in the blueprint of robbing prop firms. Now, once you've done that, and by the way, if you don't know how to do that, I've got my free Bulletproof Your Mindset tool, which is the link in the description. And that's a tool you want to use and implement before every single trade you take. Very, very important. Now, the next step to robbing prop firms is you want to now learn how to bring yourself back to a state of equilibrium after every trade you take. Okay? After every trade. I don't think it's difficult to see that when you take a loss in the market in your mind, it's very easy to push yourself into this state of shame, into this state of self-minimization and fear. And if you're in that state, guess what? If you come to the market the next day and you're still in this self-minimized shameful state over fearing taking another loss like you did the day before, if the market presents an opportunity to you, you're going to be too scared to act. You're not going to execute on that opportunity. So too, if you had a winning day that previous day and you puff yourself up into this state of pride, self-exaggeration, and greed state, guess what? If you come to the market the next day, you're gonna feel invincible. You're gonna feel like you're better than the market, better than your own rules, better than your own trading plan. You're gonna force ideas onto the market. You're gonna trade when the market's not ready to be traded. Over here, you're not gonna trade when the market's ready to be traded. Over here, you're gonna be trading when the market's not ready to be trading. Over trading, under trading, because of your pride and shame, because you're out of a state of equilibrium. So as a trader, you need to learn how to self-govern and bring yourself back to a state of equilibrium. This is done through good questions. When you're puffing yourself up and exaggerating, you have to learn to remind yourself of all the risks and drawbacks and all the things all your shortcomings, all the things that you don't know, to bring yourself back to a state of equilibrium. And if you're in a state of shame, you need to remind yourself of all your benefits, all your good components to bring yourself back to that state of equilibrium. This is what I teach in depth in the 12-week program. So if you want to learn those exact questions that I teach my six-figure traders, it's in the 12-week program. Now, the fifth step to robbing prop firms is you now have to structure your life in a way that allows you to consistently execute on your mechanical trading plan, managing your expectations before you trade, and getting back to a state of equilibrium after you trade. You have to structure your life, all 7 areas of your life, your relationships, your job, your health, your fitness, your learning and your studies and all that type of stuff. You have to structure your life in a way that allows you to do that, which means structuring a time component in your day free to trade the London or the New York session or whenever you trade. Giving yourself enough time to be able to do your forecasting and do your review and do all the components that are necessary to stick to this. Because these are the first 4 components, or 5 components, 3 and 4 usually go together, the first 4 to 5 components of consistent profitability. You need to have these as foundational components before you then start scaling up with prop firms. Now, it's worthy to note, I usually put these in 4, but I've broken up the 2 mindset tools into 2 different. So we're going to call it the 5 steps to consistent profitability. It's important to note something this far into the masterclass. I'm developing the blueprint from bottom to top because I want you to think of each of these components as building blocks or foundational pieces. If you don't have the building block before, the building block after is going to be weak. It's going to be built on a weak foundation. If you don't have your edge, everything else crumbles. Your mindset's not important. Your structure doesn't matter really, because then you come into the market and executing on something that doesn't even work in the first place. Your foundational principles are off. So you need to think of each of these components as building blocks, and you need to make sure that each component is set in a strong foundation before you move on to the next, because if you don't do that, then the next step is vulnerable to the step before. Any shortcomings or any shortfalls or anything that you overlook in the initial stages, you will pay the price for later on in the journey. And if you build your blueprint on a poor foundation, a poor trading foundation, without the right mindset, without the right edge, without the right mechanical trading plan, without the right life structure, you're going to pay the price for that later on. If you're further in this blueprint watching this video already, it's okay. You can go back and adjust and make refinements. But this video is about bringing you the awareness as well that you have to have the right components in place. And if you don't already have that and you're further in the blueprint, then go back and address these components immediately. Very, very important. Okay, now step 6. You want to then go off and pick a prop firm that has a no time limit, that has a fair evaluation, that has a good scaling plan, and has, those are the main components. No time limit. You really shouldn't be going for a prop firm nowadays that has time limits. A fair evaluation, something that makes sense for your trading rules. A good scaling plan, because you want to be you want to be fairly remunerated for the amount of work you put in. If you're putting a lot of work in to develop and get to this stage, you should be getting, anywhere or having reasonable scaling plans into the hundreds of thousands, into the millions in capital, and getting a majority share of that, a lion's share of that profit split as well. So look into prop firms that resonate with you, that resonate with your trading style, and that have fair evaluations and that have fair profit splits and have no time limit. Telos Capital is a great option. Okay. Now, step 7. You now want to go off and consistently execute on your trading plan with a balanced set of mind, this life structure you've established here, to secure your first prop firm, your first funded account with your first prop firm. Now, an additional bonus tip here is that looking at your strategy and looking at your edge, you may need to set up a drawdown protocol. For example, if you know that your edge over here can experience a 12% drawdown, for example, and you see that Telos Capital has a 10% drawdown buffer, then you may need to set up a drawdown protocol. When you go -5 into drawdown, you start risking less just to make sure that you don't hit the drawdown buffer. So depending on your edge, you may need to set up a drawdown protocol. Look into that. Okay? But then once you secure your first funded account, you then want to go off and you want to repeat the process to secure another funded account with a different prop firm company. So you repeat step 7, secure another prop firm funded account with a different company though. Okay, because diversification is very important. And you want to have a look at the regulatory environments where these prop firms are set up, and you want to diversify across them, because nobody really knows what's going to happen next with the prop firms in different regulatory environments. So diversify across your different prop firms. And then you want to go off and consistently execute on your trading plan, your life structure you've structured here, executing your mechanical trading plan with a balanced set of mind consistently. And you want to do that on your multiple different prop firm accounts. You want to have 3 different companies. So you repeat step 7 again, and then you have 3 different prop firm companies, 3 different accounts with 3 different prop firm companies in different regulatory environments with trade copiers. And then you want to continue to execute on your trading plan until you achieve max allocation with all 3. And the reason this is so important is because if one of these prop firms goes under, or there's changes in regulation in that environment, you then don't lose 100% of your nest egg. You may lose 33% or 10%, depending on how that sort of grows. But you lose a smaller percentage of your overall portfolio is the point. Okay? So my suggestion is you start with a trusted, good prop firm that has fair evaluations, great scaling plans, and there's no time limit. Telos Capital is a great option. You get one account, you pass the evaluation, and then you diversify to a different prop firm, and you secure an account there, and you start to scale up with that, and then you go to another one, you secure an account there, and then with the trade copy, you build all 3 simultaneously to max allocation. And really, you can start to use the refund and the payouts to cover your next prop firm, so you're not out of pocket. But what you want to get to is the point where you're at max allocation, not because you're focused on the outcome, but because you're focused on consistently executing on these first 5 steps here, the process. This is the process. And you're consistently executing on the process. That's what yields you the great outcome. And really, when you get to this stage of really starting to scale up, you want to be attentive to the psychological issues that pop up. The fear and the greed, the limiting beliefs, your beliefs around money. And you want to start taking payouts from these prop firms and diversifying again, putting them into personal accounts, putting them into different businesses, putting them into long-term investments, income-producing assets. And really the main focus that I'm really encouraging my traders to focus on is utilize the prop firms as a great way to scale up, a very good low risk way to scale up, but do so in a way where you're also building a track record on larger and larger capitals, managing other people's money to then go off and pick up private investment and to start building out your own little private firm, again, as diversification. Okay? And of course, you'll have to look into your own legal components with that, with your own environment in your own country and that type of stuff. Okay? But the point here is that you're utilizing the prop firm as a tool to leverage your skill as a trader. And all the while you're focused on the process of consistently executing your trading plan, and you're utilizing the prop firm to leverage. And you're never breaking these foundational principles down here. And you're always remembering that you have to focus on building the layer before you build the next layer on top. Because anything that's built on top of a shitty foundation won't last, it won't sustain. And really, this blueprint will help you sustain if you follow it properly. Okay, I hope that makes sense. Now, this is part one. Let's get into part two. Part two of robbing prop firms for everything they have. You have to recognize that a prop firm is a tool at the end of the day. Just like a hammer can be used with malice intent. That's a hammer. A hammer can be used with malice intent to hurt someone. That same hammer can also be used to build hospitals that go off and heal people. So a prop firm is a tool, just like anything. A prop firm is neutral in nature. But some people may come off and label that prop firm good and positive, because in that moment they're consciously aware of the benefits, but they're unconscious of the drawbacks. Because in actuality, that prop firm is neutral. But in someone's personal reality in that point in time, when they're labeling the prop firm good, they're aware of the benefits. Now, some people may go off and label a prop firm bad and negative and evil. But again, that's just that person's interpretation, because in that moment, they're consciously aware of the drawbacks, they're unconscious of the benefits. The truth is, a prop firm is neither good nor evil, it's just a tool. Just like a hammer is neither good nor evil, it's just a hammer. But sometimes that tool can be used positively, sometimes it can be used negatively in that certain period of time, in that certain perspective. Someone will label it good or bad. But you as an individual have to be aware that if you're labeling a prop firm good and you're infatuated with that prop firm and you think that prop firm will solve all your problems and you think that prop firm is the holy grail or whatever, and you're addicted to that prop firm, then what's going to happen is you're going to have fear of losing that prop firm, and you're going to self-minimize to that prop firm. And when you maybe get an account with that prop firm, you're going to now have so much stress and anxiety when you're trading it because you fear losing it. You have the fear of loss when you're infatuated with the prop firm. And if you're resenting the prop firm and you're calling them evil, then you're going to have a fear of gaining it. And you're not going to truly leverage your skill as a trader and take advantage of this great opportunity to utilize prop firms. So the way I encourage you to view a prop firm is as leverage. It's a leverage point that allows you to leverage your skill as a trader. And when you have those first, I use 5 foundational steps in this video, but 4 steps to consistent profitability. There's 2 mindset things go together. Once you have those first 4 components in place, the prop firm is then a leverage point to magnify your skill and make more money as a trader. So I'm not trying to say that's good, I'm not trying to say that's bad. I'm trying to say that a prop firm is neither good nor bad. It's an opportunity to leverage your skill as a trader and make more money when you have those first 4 steps to consistent profitability in place. So, as a trader, you have to be aware of what stuff you're projecting onto a prop firm. If you're labeling that prop firm good and you're infatuated with it, just understand you're going to have stress, anxiety, a fear of loss of your account, and you're not going to be able to trade it successfully. And if you have a fear of gain, if you're labeling the prop firm evil and you're fearing its gain, then you're certainly not going to be able to scale up and take the full advantage of what a prop firm is there to offer and leverage your skill. So the best traders see prop firms for what they are, neither good nor evil, just a tool to leverage their skill. And this is what I teach in the week 11 of the 12-week program. What I encourage my traders to do, although I'm not going to share the exact tool, but I'm going to share the principle behind it. The principle behind it is you need to be aware if you're infatuated with a prop firm initially and you're seeing all the benefits and all the good, and that's what's leading you to actually sign up for the prop firm in most cases, you want to go in and list all the drawbacks to it. And you want to become aware of what are all the risks of a prop firm. And really, I've built those risks into my advice today. But one of the biggest risks is that people aren't really sure about the sustainability of some prop firms. And sometimes they can just go poof, unfortunately, even some very well reputable ones, which we've seen. That's not something I'm making up, that's hard evidence that we've seen. So what you have to be aware of is one of the risks is that a prop firm is going to have sometimes this unreliability behind it, which is my suggestion in the importance of diversifying your prop firms, diversification. So as a trader, you need to go into a prop firm aware that there's going to be good, there's going to be benefits, but there's also going to be drawbacks to it. And when you can be aware of the benefits of a prop firm, your ability to leverage your skill as a trader, and you're aware of the drawbacks, what could go wrong, the risks, but you've taken one step further and you've planned contingencies and you've mitigated the risks, and you've put things in place to mitigate those risks in advance. Now you're going into the prop firm saying, all right, there's benefits and drawbacks. I'm aware of both. I can see that this prop firm is going to help me leverage my skill, but I'm also aware at the back of my mind that, this may not be around for, 10, 20, 50 years. So I'm diversifying as well. And I've got a game plan beyond that, like I've shared today, and you've mitigated those risks. Now you're a trader who's most likely going to have success with a prop firm because you're balanced and you see the prop firm for what it really is. It's neutral. And when you see the benefits and the drawbacks in equal degree, you don't see it as either good or bad, negative or positive. You see it as neither. You see it as a neutral thing for what it is. As opposed to a trader who's, oh my God, can't wait to go for this prop firm. It's going to change my life. And then the language they're using 2 weeks later is, I hate this prop firm. They go through what is in chemistry, a dynamic equilibrium. The infatuation is humbled by the resentment that follows. So become aware of the stuff you're projecting onto prop firms. In actuality, it's just a neutral thing. If you're infatuated with it, you need to start to list the drawbacks until you see the benefits equal the drawbacks. And then you want to mitigate and put contingencies in place for each of the drawbacks, each of the challenges, each of the risks. And if you're labeling a prop firm evil, it's more likely you're projecting your own stuff and your own emotions and your own guilts onto the prop firm, your own resentments onto the prop firm, and you're missing out on an opportunity to leverage your skill. So it's probably wise to go in there and address that stuff and then utilize the prop firm for what it is. It's a leverage point, it's a tool. Okay? I hope that makes sense. So these are 2 main components that are going to help you rob prop firms for everything they have and scale up and make a lot of money as a trader and make the type of money that you deserve to make, especially because I know a lot of you have put an enormous amount of work and energy into developing your skills. It's now an opportunity to leverage your skill. Okay? Check out the resources in the description and the first comment. I appreciate you watching this far to the end, and I look forward to seeing you all in the next video.